Now on BBC News, the latest from New York and around the world. Business Today.
Live from New York at the opening bell, this is Business Today. A muted start on Wall Street this Friday as stocks struggle for direction in the absence of economic data as the shutdown drags on. Cash cry for Argentina. The US puts more than $20 billion into helping the troubled South American economy. And trading fees. China introduces new charges for American-linked ships just days before Washington brings in similar measures. We'll assess the impact on their trade war. Welcome to Business Today, live from New York. I'm Michelle Fleury, and US markets are looking for direction as they continue to grapple with the economic impact of the government shutdown. Thursday saw senators again fail to agree on measures to fund the government. And given they aren't scheduled to meet again until Tuesday, there is growing concern that September's inflation data won't be published on Wednesday as scheduled. Well, for more on this, I'm joined by Martin Bacardux, senior writer from Barron's. Martin, this lack of data, I mean, at this point, normally market stocks are driven by what is happening on the markets, and yet there is a lack of data. Is that sort of why we're seeing this drifting today?
I think to some degree that's absolutely right. The markets are flying blind with some very important figures heading into what's really a crucial period for the marketplace in general. We're heading to the third-year anniversary of this bull run in stocks, and people are wondering whether it's going to continue into the end of the year and beyond. And a lot of that dependence is going to be what happens with the Federal Reserve and interest rates. And they need this jobs and inflation data to calibrate what they're going to do about interest rates writ large and growth and inflation forecasts more specifically. So without those numbers, everybody's relying on private data, and everyone's data is different. So I think to your point, yes, that's part of the reason why we're seeing some of this tepid action in markets over the past few days.
I mean, a lot of people have said that shutdowns typically don't have huge economic impacts, but as it drags on, that starts to kind of build up. Here we are on a Friday, first paycheck being missed. You know, how significant is it, given that the impasse doesn't seem any closer at this point?
I think your point is a good one in that it becomes cumulative. Ultimately, we'll understand the economic impact as time goes on. But generally, we're borrowing activity from today and probably replacing it with activity further on down the line after the shutdown is resolved. And the anticipation, of course, it will be. It might be a matter of weeks. I don't imagine it will be longer than that. But actually, what's propping up the economy right now are the investments in artificial intelligence, which are absolutely titanic. It's been responsible for about 2/3 of the investment growth of the US economy over the first half of the year. It's going to be similar over the second as well. So it's interesting, your point, in that, yes, typically we would see some pullback in activity, but because we have that buttress of AI investment right now, we are clouded to some degree in understanding just what that impact is.
Yeah, and Jamie Dimon, the head of JP Morgan Chase, telling my colleague Simon Jack just yesterday that, you know, he's worried a bubble may be here. What's your sense, given here we are headed to another week of sort of gains for the stock markets in America?
I think well, firstly, that interview was fantastic, and I think a lot of the world's media used some of the information from it. But Mr. Dimon is very candid, and I've always appreciated that from him because he doesn't shy away from very difficult questions. I think ultimately we are looking at very high valuations right now, but the difference that we see today compared to, say, the dot-com bubble of the late 1990s is the fact that we do anticipate a real and visceral economic impact from these artificial intelligence investments. So even if we see some of the stocks being overvalued and then retreat very quickly, the impact of the technology is absolutely real. Ultimately, investors will have to decide whether the value today is worth paying for, given when we see that ultimate impact from the technology itself. But that's really always the case when you're talking about private investment in innovation. There's that time lag that everybody bets on, and that's where you get paid.
Martin Bacardux, always good to chat to you on the programme. Have a good weekend.
Thank you.
Now turning to the world's two biggest economies, the US and China. Are trade talks under threat? China's government says it is going to start charging extra fees to American-linked ships that use its ports. The new charges are set to come into force on Tuesday next week, which is the same day that similar American fees on Chinese ships come into force. Now, the signs of heightened tension come after China tightened export controls on rare earths and before President Trump and President Xi are due to meet at the end of this month. Well, John Zinn is a China expert at the Brookings Institution, a non-partisan think tank based in Washington. He's also a former director for China at the US National Security Council. John, good to see you this morning. What do you make of these new shipping fees from China and the message that they send on trade?
Yeah, well, of course, the timing of these new moves is really interesting, right? Because just a few weeks ago, we had a phone call between President Xi and President Trump, after which President Trump said that the two leaders would be meeting on the margins of APEC. And I think what's really interesting here is that instead of trying to create a positive atmosphere ahead of that meeting, that what we see from the Chinese side are these punitive measures over the last 2 days, these countermeasures to U.S. actions. I think what's going on here is that the Chinese side feels that they have the upper hand and they have leverage, and they're using that meeting that upcoming meeting to maximum effect here. And I think what's happening more broadly, and I think we've seen this over the last year or so from Xi Jinping, is that he's moving from playing defense with the United States to now playing offense and looking for ways to seize the initiative and shape the bilateral dynamic.
Presumably he feels he's sort of seen some success on the soybean front, for example, where that is a huge export for American farmers to China. That's pretty much fallen to zero. And of course, yesterday we saw China announcing new export controls on rare earths. That was something which the most recent talks between these two seemed to yield progress on.
Yeah, I think that's right. That's what's very striking about this. And I think what's important here is the particulars of the agreement, such as what we've seen in the press. Namely, the Chinese side didn't agree to roll back their export controls, right? What they agreed to do was give licenses so that these could be exported to the United States. And imposing that regime in the first place gave them leverage to tighten it up. And now what we're seeing is a new regime. And the irony of it for the United States is that this looks very similar to the export control regime that the United States put in place against China during the Biden administration, right? So there is a certain mirror imaging that's going on there. I think what's interesting with the soybeans in particular is that it does give China leverage, but I don't know if those were necessarily included in the discussions that happened between the U.S. and Chinese side in earlier rounds of negotiations. And I think that's how China is playing this game. Each time they are able to secure some kind of agreement with the Trump administration on a particular issue, China puts out something new, right? And then the discussion ends up shifting to that. And so it's a game. What happens is that the Trump administration is having to play a game of whack-a-mole and deal with these issues as they come up.
But then for the global economy, if things go wrong and we head back to a world with even higher tariffs and more export controls, I mean, that is the huge fear here. And that seems to be the mood as we kind of head into this meeting between these two leaders.
Yeah, I think that's definitely the risk. But I think what China took away from the Liberation Day tariffs and the cycle of escalation followed by de-escalation is that the Chinese side had a higher pain threshold for the pain that was caused by those tariffs, right? And I think from their perspective, the Trump administration blinked. And I think their anticipation is that even if the U.S. imposes some kind of countermeasures in response to what China has done, that ultimately the United States will back down and that China is a better position to go through this. I think part of what she is banking on, too, as I noted at the outset, is that Trump wants some kind of meeting. He wants to meet with Xi at APEC and that he wants some kind of deal. And I think in the way that China has constructed these export controls, they've left some wiggle room for that, right? These export controls will not go into effect until December 1st. And so that opens up the possibility that there can be some kind of negotiation over how stringently they end up implementing these export controls in the coming months.
John Zinn, China expert at the Brookings Institution. A lot to watch in the coming weeks ahead. Well, let's move to Argentina, where the United States is stepping in to help the troubled South American economy. President Trump sees his Argentine counterpart, Javier Milei, as a vital regional ally who is battling to make the right kind of economic reforms. The US help for Argentina amounts to a $20 billion currency swap framework. Plus, the US has directly purchased Argentine pesos, but hasn't said how many. President Milei has undertaken sweeping reforms to get inflation down to 1.9%. But financial markets are increasingly concerned that he is losing political support for these changes. Meanwhile, the head of the International Monetary Fund has expressed her support for what she said was a strong economic programme anchored in fiscal discipline, in a message backing the US bailout. Well, Jimena Blanco is chief analyst and head of America's research at the global risk intelligence advisors Verisk Maplecroft, and she spoke to us earlier about how unusual this move is and whether it will pay off.
It is a first for the U.S. government and a first in Argentina. But the key question here, I think, in the report you get to it, is more political and whether it will pay off in the medium term or rather short term, because the answer could be coming to us just at the end of the month after Argentina has midterm elections. On the geopolitical front, in those same statements yesterday, Bessent was very clear that he got a commitment from Argentina that it would push China out of the country. Of course, China has made great inroads commercially and in investment sense in Latin America generally, but in Argentina in particular. And also, so that's the big picture. More regionally, Milei is one of the few strong allies that the White House has currently in Latin America. But there are several countries that are heading to elections over the coming years. So we have Chile, Colombia, even Brazil a bit further out in the timeline. And so for the White House, it's important to show that being close to Washington pays off so that other alternatives, political alternatives in those countries may also receive a political boost by association. It is also important to show that strength in negotiations with the IMF. So again, this is very much about supporting a close ally in the region and also in the broader geopolitical game. And it's less about the fundamentals of the Argentine economy or whether this is a strategic economic investment for the United States in the longer term.
Well, so far not much reaction from the markets to this news. And just before we go, a quick recap. US markets are higher, looking to basically hold on to those weekly gains. That's all we have time for here on Business Today. Thanks for watching.